Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 27th, 2025, and we're diving into AT&T's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AT&T's report is quite comprehensive, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. AT&T reported total operating revenues of $32.3 billion for the fourth quarter, a slight increase from last year. However, the real highlight is the net income, which surged by 86.5% to $48 billion. John, what drove this impressive profitability?
Indeed, the net income growth is remarkable. This was primarily driven by a significant reduction in asset impairments and restructuring costs, which fell by 97.6% compared to the previous year. Additionally, AT&T's adjusted earnings per share came in at 56, beating the analyst forecast of 48, which is a strong indicator of their operational efficiency.
Operational efficiencies and future outlook. Moving on to operational efficiencies, AT&T's operating income for the quarter was $5.33 billion. How did they manage to achieve this, especially with the interest expenses and other financial factors in play?
AT&T's focus on cost management and strategic investments has paid off. Their interest expense decreased by 3.8%, and they saw a substantial increase in equity income from affiliates, which rose to $1.07 billion. These factors, combined with a disciplined approach to capital expenditures, have positioned AT&T well for future growth.
And what about their future outlook?
The company has provided a positive outlook, emphasizing continued investment in their core segments and a focus on enhancing shareholder value through strategic initiatives.
Segment performance and strategic initiatives. Let's delve into the segment performance. The mobility segment continues to be a strong performer with revenues of $23.13 billion. How are the other segments faring?
The business wireline segment saw a decline in revenue, down to $4.55 billion, reflecting ongoing challenges in the enterprise market. However, the consumer wireline segment showed resilience with a 3.4% increase in revenue, driven by broadband growth. AT&T's strategic focus on expanding their fiber and 5G networks is crucial for sustaining this momentum.
What strategic initiatives are they prioritizing?
AT&T is heavily investing in fiber expansion and 5G deployment, which are key growth areas. They are also optimizing their business wireline operations to better align with market demands.
Financial health and risk management. Financial health is always a concern for investors. AT&T generated $38.77 billion in cash flow from operations in 2024. How are they managing their capital expenditures and debt?
AT&T's capital expenditures for the year were $20.26 billion, reflecting their commitment to infrastructure improvements. They also made significant strides in debt reduction, paying down $9.41 billion in long-term debt. This focus on reducing leverage is a critical component of their risk management strategy.
Are there any risks that investors should be aware of?
While AT&T is making progress, they still face challenges such as competitive pressures and the need to continuously innovate in a rapidly changing telecom landscape. However, their proactive approach to debt management and strategic investments should mitigate some of these risks.
Key takeaways. In summary, AT&T has delivered a strong performance in the fourth quarter of 2024, with significant growth in net income and earnings per share. Their strategic focus on fiber and 5G, along with effective cost management, positions them well for future success. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing AT&T's performance.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on AT&T's performance in the comments below. Until next time.